Hello and welcome back to the Note. Well, we've had another day of very high volatility, ending up somewhat more comfortably than the day before. Continued extreme moves in the oil price, ending towards the upside, which is a relief. Continuing extreme volatility in Chinese stock markets, and the great news is that I can promise we're not going to have that for the next couple of days because the market's going to be closed until Monday. As for the US, we've had a very strong day for the stock market following yesterday's sell-off, led particularly by the tech names. That's possibly because of the economic data we heard today, although I don't see any of it as being particularly changing the situation. If anything, the Fed's beige book, a more qualitative look at the US economy, seemed to me to suggest that they did see perhaps more strength in the US economy than those who were hoping to defer the rate rise would have liked. I'd like to quickly take a look at two broad long-running trends that perhaps can be easily ignored. First of all, remember the Brics: Brazil, Russia, India and China, first invented as a term by Goldman Sachs in the wake of 9/11 in 2001, an idea that the bigger emerging market nations should try to punch more weight. It's quite remarkable what's done. You can see that in that period they have first outperformed the S&P 500 by more than 400%, and since then they have now underperformed it by more than 2/3. At this point, we are back where we were over a decade ago for the Brics. This argues that perhaps we could go still further, but it's a very strong trend which may yet be coming to an end. Secondly, I'd like to take a look at the performance of hedge funds. Hedge funds' performance has been terrible when judged against stock markets over the last 6 years. That arguably is only to be expected. Hedge funds are there to hedge. When the stock market does wonderfully, goes up in a straight line for a long time, you don't need the hedge. Hedge funds won't look so good. It is quite interesting that the very preliminary data we have here, this is the HFRX Equity Hedge Fund Index, suggests that they might have had a good August. It will be very interesting to see how that pans out. Many people are inclined to blame hedge funds, and particular hedge fund strategies, for the extremes of turbulence we've seen recently, particularly the big moves late in the day. If hedge funds can show that once the turmoil resumes, they can show their mettle, that will help them a lot. It's worth looking at as we try to find the signal amid the noise.